Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Hello, welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney. Excited to be with you as always. Today is a quick reminder about the downfall of relying on your new employer's group long-term disability policy. I work with thousands of physicians across the country with their private specialty disability coverage. And we have a lot of clients that are transitioning, thankfully, finally, from their training careers to their attending career. And it's much earned, a lot of blood, sweat, and tears that goes there into getting to that point. And so I'm really happy for our clients. I'm in regular conversations with clients at this point where they're looking to increase coverage based on their attending income. The top insurance carriers have a formula that they use to calculate how much insurance someone can purchase as an attending. It includes their pre-tax salary or annualized income and a portion of the employer's group long-term disability. Sometimes an employer will not offer any group LTD, long-term disability. Other times an employer will have a base amount where they say, hey, every employee gets a group long-term disability that's 60% of their salary up to $10,000 per month taxable, or $15,000 a month, or $20,000 a month, or whatever. And sometimes an employer will have a small base amount where they'll say, we'll pay 50% up to $1,000 a month. And then if you want more, you can opt in and pay for a group long-term disability policy that would pay 60% up to $10,000 or $15,000 per month. And on paper, that can look good. But the downside is that the higher that benefit is, the maximum cap is for that group policy, the lower the amount of the private specialty coverage they can purchase. And I'm not saying that's bad news because I'm the insurance agent or broker. I'm saying that whether I'm the broker or not, that the reality is, and I've covered this in numerous other podcasts, but I just want to say it here again as a reminder, the reality is that the qualitative difference between private specialty coverage that's done properly and any employer group LTD policy is like night and day. A group long-term disability policy by default, by law, has to cover every employee at that employer, regardless of health. So the least healthy employee gets the identical policy that the healthiest employee gets. Well, even if it's, especially if it's voluntary, guess who opts in for the maximum amount? It's going to be the less healthy employees. And insurance carriers know that. That's called adverse selection. And it can bankrupt insurance companies, and they will run as fast as they can, as far as they can, and move heaven and earth to avoid adverse selection. They want to sell and offer the group LTD policy to the large employer, so they don't want to leave that marketplace. The way they offset the risk is not by not offering that insurance, but by watering down the definitions that insurance provides. Even if the PDF slick or marketing piece that you get says it's own occupation or specialty specific, how they define that is very broad. Could include virtual medicine, telemedicine, teaching. Anything you could do as a physician means that you can still do your quote specialty, which is physician. Even if they're narrowing it down to another one like internal medicine or some other type of oncologist, whatever the specialty is, they're going to define that very broadly. There's also not a recovery benefit in employer policies. Oftentimes the residual benefit requires total disability first, which is an out clause. So there are just a number of gaps in that policy. Your private specialty coverage, if it's designed properly, is going to cover you if you can't do the material duties of your specific day in and day out specialty or subspecialty. And then it's not going to penalize you if you did decide to go do telemedicine or do something, consult, write a book, do something else and make an unlimited income. It's going to include a true partial or residual benefit that doesn't require total disability first. So you're covered if you're partially disabled. It's also going to include a long-term recovery benefit that pays if you medically recover from a disability and go back to work, but when you go back to work, your income does not recover, which happens frequently. So it's the best coverage if it's done correctly. I help my clients do this, but whoever you're working with, if it's done correctly, then that coverage, if you become disabled, if an illness or injury prevents you from doing your specialty, then you'll get paid. Very likely. It's that cut and dry. If your doctor overseeing your care confirms that you can't do your specialty, then they have to pay you. Your employer policy is very likely not going to pay you. If they do pay you, it might not be for long. And that doesn't matter who your employer is. So the majority of our clients are going to opt out of any voluntary portion that they have. And the most fortunate ones are the ones that don't have any group long-term disability, and they just utilize their private specialty coverage to fully insure their income, and they can buy more if there's no group LTD to offset how much of the private they can have when they become an attending. At the time of claim, you're going to want to get your hands on as much of the private specialty coverage as you can. That's what you're going to count on. And if your employer policy pays a benefit, it will just be icing on the cake that you understand may not be paid for long. And in a significant number of situations or percentage of situations, you won't get anything. And so again, it's not your employer's fault. This is not to knock employers. It's kind of knocking insurance carriers that participate in the group long-term disability marketplace, where they talk about own occupation. They may make it sound, they're going to make it sound good on paper because the employer wants that to be seen as a benefit that they're providing to you, because that's what they think they're doing. And the HR and benefits people don't understand the policy much more than you do. Okay, so asking your benefits person if it'll cover you if you can't do your specialty, that's wasted time. They're probably going to say yes. They're not going to know. It's incumbent upon you at the end of the day to understand whether or not your insurance is going to actually do what you think it's going to do if you become disabled. Your family, your financial future are counting on you making sure that you get these details right. So make sure you do that. Just food for thought, a word to the wise. I would be happy to discuss your situation in more detail, as these details are vitally important. Message me here, 704-270-2376, and we can schedule a time. Again, 704-270-2376. Thank you for your time. I'm grateful for that. Take care.
Thanks for listening to the Cover Your Assets podcast, an Odd Conduit media production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.